I love our intro. It like makes me want to dance.
It makes me dance at the end of backdrop. Do you see me? Thank you.
Welcome to CRE Power Hour. Your hosts are the amazing Stephanie Gillison and myself, Lisa Marie Wand. And we have over 4 decades of combined commercial real estate experience, and we've built and we've scaled and we've conquered the real estate world. And we're here every second and fourth Wednesday at 11 a.m. Pacific to bring you top guests from the commercial real estate fields. So get ready to uncover some trends, some strategies, and meet the movers and shakers of the business. So today we have Heather Konopka, who's actually been a guest on our show before. She's so awesome. We wanted to bring her back. She hails from Dallas, Texas. And we're going to hear some really interesting information. We're going to talk about some fun topics today. Welcome. It's great to see you again, Heather. And this is our last show of 2024.
Woo! We're going out with a bang with the amazing Heather. See?
Love to believe it.
There's a reason for everything, right? Heather, I think it's been close to right at a year since we've had you on, the last time, because you and I first met at Globe Street's Woman of Influence, which was amazing. And then here we are a year later having you on the show. And tell us what Dallas, Texas is like, and tell us all this amazing stuff that you've had going on since we last spoke.
Well, thank you guys, both of you, for having me on. Super excited to connect again. Always love the time spent with you, and just this energy is amazing. And I have to say it's Dallas, Fort Worth, because I'm in Fort Worth, and we love Fort Worth. So anyway, Dallas, Fort Worth. I'm not sure why it's not Fort Worth, Dallas, but if it were up to me, I'd rename it.
Alphabetically, right? Alphabetically, maybe.
So anyway, but DFW, what's going on in our market? We still have things happening. We still have deals closing. We still have things, development still happening. And, in Texas, we do have land. So that really is, I say buy land because they're not making any more of it, right? I think I said that last time.
Yeah, I think all of us say that for sure, right?
Yeah.
That's beneficial for you, Heather, and your investors and your clients, because like where I am in Northern Nevada, although we have a ton of land, the main areas, the main markets are landlocked. So we're seeing a lot of infill projects, and then people starting to go, way out where it's going to take years and years for things to catch up. But in Dallas, Fort Worth area, I was just there recently. My corporate headquarters is there. You still have a lot of opportunity there, right?
Yeah, we do. We still have a lot of opportunity. And I bet in Nevada, you guys experience this. The water obviously is an issue. And, you get into some rural areas here and you've got some water challenges. I actually serve on a board that is a water district, and it's a really interesting underlying concept or dynamic that nobody really thinks about and really, takes time to think about. But, our water is really, really important. And I know that's going to hinder some developments, but we always find solutions. And that's what we're doing, is working in the problem solving, finding solution business, right?
Yes. In fact, I was just on a market leader call for my company, More Partners, and the term that we were using is change management. So commercial real estate is moving from these transactional type deals to change management, working with companies on right sizing, moving to save costs, changing their labor force. And it adds a whole nother dynamic to what we do as commercial real estate brokers and trusted advisors, is taking a look at what's best for our client and how we can come up with, supporting them with the changes that it takes in order for them to remain successful in growth mode and competitive in the world market.
Yeah, absolutely. You hit the nail on the head right there.
Heather, you've primarily always, you've done all kinds of deals and transactions and so forth. But before we started the show, you were talking about, you're doing office deals. I love hearing that. I mean, I've talked to some of the heads of some of the major brands in commercial real estate. We've actually had them on this show. And we had well, maybe I shouldn't say, we can go back and watch the rerun, but with Cushway, I can't remember her exact title though. I forget. But anyway, she was worried about her brokers in, the New Jersey and the New York, and so much of the Northeast, because office has just dried up. Those were her words.
Yeah.
And you were saying prior to us starting the show that you've gotten involved in some office deals. So share what's going on there.
Well, it really has been it's kind of morphed into this. About 3 years ago, I was a lender reached out to me to do an opinion of value of an asset that they had provided a loan on, in the $15 million range. And, the buyer put, 30% down. And so they were foreclosing on that borrower. And they, wanted to know what could they take it to market for. And at the time it was 28% occupied. So obviously what gives something value, right? It's income. I mean, yes, you've got the actual structure, but from an investment standpoint, it's the income. So, it didn't look too good. A year later, they reached out to me saying, hey, you gave us this opinion of value if it were, as is or leased up. Would you want to help us get to that lease up rate? And, of course, I love opportunities and value relationships and, have a team.
And you problem solve. What better problem solve?
Management change or change. What was that?
Management. Yeah.
We took on the asset and we've taken it. I think we're about to get to a little over 80%, and, from 28 to 80% in 2 years is a nice feat. But what's happened in office is that value has just plummeted, right? Or overall the US. But what I love about our DFW market is we lead the nation in getting back to work. While the statistic is really low, and I read it, and I've slept since then, but I think it was like we're at 58% of our workforce is back in the office.
Oh, that's a great number. Nationally,
really
that's almost double.
So leading the nation, we're getting back into the office. And so what I have some investors who have predominantly done multifamily. And, the multifamily sector has gone from, 20 years ago, a $25,000 door. It was trading now, at $150,000 a door. And while the rents have increased, they haven't increased that much. But it just became where it just didn't make sense. And then you could build, but you've got to go through the zoning, and you have all of the not in my neighborhood, not in my backyard people, the NIMBYs, I think they're called.
All the opposition.
So it's sometimes hard to get that past P&Z and city council. So multifamily developers and owners have said, I'm going to look at office. So I had a guy, he was purchasing a deal. He was actually going to scrape the office building, which is a little over 150,000 square feet, and build around 450 apartment units. And he asked for an extension, a 5-month extension, taking us on into next year. And the seller was like, how about I reduce my price, millions of dollars, and you move forward with a deal this year. And he was like, wow. So it puts it, $50 a foot on the asset. And even if you come in and, lease it up at below market rents, and I think at, 40% occupancy, passing through triple nets, it's, 11, 12 cap. And then imagine if you get it to, higher occupancy. So yeah, it's really interesting what's happening, what's going on. People are still needing space. I think there's, whether it's a user who might own part of the building and, in essence, his company or her company leases it from the ownership. I've got a guy doing a 1031 exchange out of a deal like that. And so it's happening. I mean, we still have movement in our market, and it's wonderful to see.
Oh yeah.
Yeah.
And it's interesting to my company. We just did a feasibility study with Microsoft US headquarters. That's here in Reno. So they have 2 buildings actually. And their ratio, they're requiring a certain amount of people to come back to work. And there's desk sharing, and there's all these interesting different things happening, and yet they still need the space. And so, in my opinion, office is not dead. It just it has a completely different look to it. And as some companies are coming into, like, a couple months ago talking about TikTok, where they were requiring people to come back to the office and even downloading an app so they could check in and they were actually in the building, because there's this kind of level of resistance for people coming back to the office. And I see more and more office landlords making the buildings a happy place for employees to come back to. And, there's people here in Reno that developers that have looked at taking office buildings and turning them into apartments. Our cost to build here has become between $600 and $1,000 per square foot for commercial deals. Wow. And, that's ground up, but also imagine trying to deal with a plumbing issue in an office building to make it into some sort of multifamily situation. So I like this idea of, purchasing below market, offering sub-market rents, filling those things up. And you can't get a 10 or 11% cap rate in our market in multifamily anymore. It's more like 4.5%. So that's great.
Well, and I think it's a great, the previous tenant. So that particular 150,000 square foot building was one tenant. So they vacated, and, the ownership, if they would have carved it up, and put, smaller tenants, they didn't want to spend any TI dollars. Plus the city would love to see multifamily there. But whoever says that, right? Well, this guy buying it says, I think I'll just keep it as an office, but I'm willing to carve it up and divide it up. And we've already shown it to people who want, 20,000. They're coming out of their larger space, or they're really wanting to get back. So it's going to be interesting how this all shakes out. And I think as, depending on where interest rates go or level out, when we think about cost of funds, being at 2.5%, 3.5%, right? I don't think we will ever get back to that. I just don't think that's a normal, sustainable rate to be at. But being in the business almost 30 years, a 6% interest rate isn't bad. Is a 5 better? Sure, 5.5. But where is that, sustainable rate? And, obviously getting up to the 8, 9, and, higher interest rates isn't sustainable. So it's interesting to see where this will shake out. I definitely think in latter part of Q1, definitely Q2, I think we'll see our rates come back down, but I don't think we'll go back to the 2 and 3, which is what made the multifamily so sweet, right? It was like, wow, I'm getting this cost of funds. I can amortize this for 30 years. I might have 2 years of IO, and, wow, the sky is so, but,
it's looking for that. It's finding that sweet spot, right, Heather? That lending sweet spot that makes commercial real estate investing exciting again. And
it's called positive leverage.
There you go. Positive leverage. Well, let's flip it back to and let's talk about land, and because I always love what, with Texas, there's been, and of course everywhere, there's been so much development over the course of really the last decade. It's been going on, but you think of even the large single family developments to the condominium, the multifamily, you name it across. And this morning, we all know I get up at 4 a.m. And what do you do at 4 a.m.? Well, I read. And so this morning I was reading about how many developers in the midst, Houston, we're talking everywhere, all over the US.
Right.
And they're bankrupt because the cost of construction has gotten so out of hand.
Yeah.
And so, and I've had a few land deals in Texas fizzle out rather. Let's just say that, because, how are you getting through those hurdles, Heather, or are you?
Well, and that's an excellent question, Stephanie. And, gosh, is that the $1 million question?
I know.
So cost of construction, I think, to say it reached its peak. I don't have the crystal ball. I can't promise you that. It has started to come down, but obviously whenever developers are underwriting and they're looking at their land cost and they're looking at the construction cost, and then they, make it up in the end game, right? Selling it to the end user. So it's when that starts to fall, then the construction cost has to come down, and then that land cost. So that landowner, I mentioned before we started that, deal that took 3 years going through P&Z and City Council finally passed a week ago, and there was a retrade on the last day.
Yeah.
So it was a retrade with the developer, with the landowner, forecasting out how, based on the last 10 months they've been under contract, this particular buyer, and where they see it going. So they reached an agreement in the 11th hour. I just think it's the gap that we'll have to work at closing. And depending on where someone is in their life, that particular landowner, and a lot of landowners may be, at a different part in their life, a different phase in their life, or, they don't want to burden their children, or, maybe they're already feuding, or who knows. And so it's just, they see that pie in the sky in the beginning. Then when you get down to reality, they have to have an adjustment in their mindset of what is the value. And then, obviously the developer is going to make the money and sell it to, whether they sell it the paper lots or they actually physically develop it and sell it to the builder. So it's just going to be interesting in closing the gap and working on, helping people understand and keeping them informed. It's and it's that communication of what value is, and it's what's that buyer willing to pay and the seller willing to sell. And if not, the deal doesn't happen. And so how bad does that developer really want it, and how bad does that landowner really want to sell? So I think we're just going to get correction in pricing. I think we're already seeing that, but
it always helps when the interest rates are extremely low, because when you're looking at development for residential, that interest rate for the end user buyer, that's what enables them to be able to afford more. Right? With interest rates being 5 times what they were 18 months ago, it drastically reduces the number of end users that exist.
That buying power is reduced.
And I'm a developer myself, and 18 months ago, it cost me, if I bought a piece of land, put in the infrastructure, developed it out, ready for construction to begin on homes, it was roughly $18,000 a lot. That cost today is $36,000 a lot.
Yeah, about double. That's about right. Yeah.
And it's not coming down. And this is y'all are gonna have to knock me off this pedestal I'm sitting on right now, because it all starts. And I had this conversation this morning actually with local city council members, and I said, look, your red tape needs to turn green, because all the fees that you're putting on us, and the fight, and the constant this and that has to get added in, because nobody does this day in and day out for charity work. I don't, right?
It's got to be absorbed somewhere. It's got to go somewhere.
So you've got all those costs. When it comes to the physical construction, lumber is doing this.
Yeah.
Everything else has consistently risen 6% every single year. Windows have gone up every quarter consistently, to where they're 18% higher today than they were 2 years ago.
Isn't that crazy?
Garage doors. Yeah. I mean, it's insane. So it's going across the board. And so, when builders come and say, well, here's the largest builder in America 2 days ago.
Yeah.
I said, how are you all ever going to get into the $250,000 price point ever again? Yeah. We said, we won't.
No, they won't. There's just not a way. So actually, and I don't know that this is the solution, but the company that I opened my franchise, our parent company, excuse me, we are partnering with a very large 3D printing company.
Yeah.
So the 3D printing of, we aren't going to be in the single family space, but we'll be doing, whether it's multifamily, industrial. I think we'll see a lot of that. We can go up 40 stories or 4 stories, and, building, I think in areas where there's a need for housing, that needs to be on the ground quick. So I do think of areas that are hit by hurricanes or areas that, devastation with fire or whatever it might be. But you can get something on the ground so quick with 3D printing. And that one is super exciting to talk about. We'll be rolling it out probably in the next 3 to 6 months.
What is the material, Heather? Isn't it concrete?
It's concrete. So that's something that's really interesting.
That's what I go back to, though. The cost of concrete goes up 6% every 8 weeks.
Yes. So then what I'm not a PhD and I'm not going to go out and work on that, but it's something that to get the components, what is it that's going to be a derivative of concrete? What's going to be put together to be sustainable? And it's so dynamic and it's so interesting. And I was reading this morning about, okay, no matter where you sit, 3D printing in space. And it's just like, what? Where is this going? It's mind blowing. But anyway, we're on the forefront of that.
We have not had that in Kentucky, my market. Lisa Marie, I'm not sure about Vegas, but I know a couple years ago, Austin, Texas, they did a 3D printing development.
Georgetown, right. Okay. Just north of Austin,
So have you ever toured that? Have you looked at, have you been close to that? Because I saw the photos. I spoke to a lot of people in Austin, and who I was speaking to in Austin at that time were residential agents, because obviously these were residential single family homes. And I was just curious as, what was it like? Because years and years ago, probably 20 years ago, there was a builder in Louisville, Kentucky that built, always do this big parade of homes, right? It's the home tour. Everybody buys tickets. Everybody wants to see the latest and greatest. And he did of course it wasn't 3D printing, but he actually formed a concrete house. And I never forgot about, we have basements in Kentucky.
Okay. Yeah.
When you go into an in-ground basement that is not circulating or breathes, there's that certain smell. And that's the smell that this entire house had as a brand new
funky smell.
So the reason why I was so curious about this 3D printing concrete, and I have no idea, you all, I'm just posing a question because I think it's a great topic of conversation. And if anybody knows this, feel free to message me or message all three of us and tell us. But with the change in temperature and humidity level and all the things that happened, even Texas had that massive unknown freeze a couple years ago where it basically wiped you guys off the grid for a bit because it was something you'd never experienced. Yeah. In drastic change like that, what does a 3D concrete printed house and building smell like? I just want to know.
I have no idea. I haven't been in one, but I'm going to find out. So
smell is important. It is very,
important. When I go into an old home with an in-ground basement and it wasn't built for a basement to be finished, obviously, it just has that smell. You know what I'm talking about, right?
Yes. Yeah,
and I do. The walls will sweat in concrete.
And with a 3D printing, there's actually little, if you picture like a bamboo wall, it's a vertical, has a little bumps or the little bamboo. So this is horizontal. So it's really interesting, hanging your, your pictures or your artwork or whatever it is. So I'm curious to see where it goes.
I think, look, we've got to do solutions somehow, some way. And until whatever goes on behind the scenes in the concrete industry and the manufacturing space and all of that keeps raising these prices up. When is enough, right? When will it fluctuate?
Well,
down?
And I think so. Something that we haven't really touched on here, but I think something about all of that pricing is labor. So labor shortages, right? And so many people not working or not wanting to work, or maybe choosing a different field. So when you think about, you've got a company that they need this product produced or whatever, whether it's steel or lumber, and you've got to entice those people to come to work, right? And so what are you doing? You pay them more. A multifamily property owner I know very well, and he'll have his top maintenance guy who's been there, however long, walk off the job because he got offered, $10 more an hour. So he either has to, match that, or anyway, it's just such a trickle effect. So
it is.
I'm not saying 3D printing will solve the world's problems, and I'm not saying it will ever replace our normal construction. I think it's a new avenue, but something about a 3D printing site is you won't need all of those workers driving that cost of whatever those, materials up. So
Right.
Well, that's one of the things I was going to mention. So in Northern Nevada, we have the world's largest industrial park here, and we're a data and logistics hub. And so much more of the building has started happening on site, with tilt ups and different types of buildings they're using. So where my mind is going with the 3D printing, Heather and Stephanie, is with the supply chain. So how much of this can just be brought right to the job site and everything can be done there, which is a way to mitigate cost. Mm-hmm. Because I just spoke with a general contractor on a restaurant project we're working on the other day. And he said, and they're a big company. He said, we're not the ones raising our prices as the GCs. He said it's the subcontractors, which is what, Heather, you're speaking to directly, which a lot of it is the cost of their labor. Yeah. And then we have all of the supply chains for all of the products that keep, like Stephanie was, to her point, raising their prices. And so the general contractors they're not the ones that really are to blame here. I think that's the process here. So I would love to see
supply chain, supply chain workforce
would look like if there was more of this 3D printing where you could wipe out a lot of the middle costs. It's an interesting idea.
So we'll see where it goes, but there's so many interesting dynamics in, commercial real estate or just real estate. I definitely, I met with a guy who recently lost a lot of money in his stocks, right? In the stock market. And, he's like, okay, I've got this much left. I want to buy real estate. So that is something I think, commerce continues. I'm working with and mentoring a lot of young people, and I love to see their energy and their excitement, and maybe a little naive here and there, but they'll learn. But commerce continues. Things still happen. People will still need things, and actually we become such huge consumers. Although maybe we are curtailing our spending a little bit, but it's so interesting, all the different dynamics of commercial real estate and real estate in general. So I love it.
And these are the times of opportunities. I mean, they just are, this is where people do diversify and get into, just like your multifamily people are now looking at office. Who would have ever bet money on that? So there's all, I was doing some statistics this morning and actually speaking to one of the agents on my team. And we just pulled up his market, and he's out of Rhode Island. And I said, look, you've got over 2,400 commercial property owners that have a loan adjusting in 2024. Actually, we just did the first 6 months of 2024.
What are their plans?
What are their plans? I said, this is your hit list to go out and make these phone calls. And that's exactly what we say is all I want you to do is call them and ask what their plan is, because they need a plan. And a lot of times we're the front line of information for them. They aren't even paying attention to their notes.
Yeah, I was just going to say, most owners, I think, know when their loan's coming due, but some it just might not be on the forefront. They might have so many other things happening and going on. So, having those conversations, and then, I think it's a huge difference to say, hey, your loan's coming due. What are you going to do? It's your loan's coming due. How do you see resolving? What do you see as the best option for you, for your asset, for your relationship with your lender? What's your lender talking about? So I think there's so many dynamics that go into those conversations. And it's, I also approach it with a little bit more delicate, conversation, because, their loan's coming due. They got it at, 3%, and, it's going to more than double in the market. And what are their options? And especially if it's a multifamily. So, we've seen pricing. I talked about per door earlier, and is that adjusting? I've got a guy that, a year ago they wanted 100 a door, and now maybe 90 a door, and their loan's coming due in May, and where are they at? So, and I also think that the C class, you really need to be very careful about your debt structure and not maximizing it. And I think that's where, a lot of people have been hit and buying those, C properties, trying to lift them to Bs and maybe didn't reach that, or, and now their loans coming due, they had 5 years on it, and it's, they probably met their metrics and their returns that they, maybe they had an investment group, but now what? Because that same deal doesn't pencil like it did at 6 or 7%. So, but yeah, having those conversations, and that's a great resource. I mean, I personally use Credit IQ, and, doing the research and, getting those relationships. But it's, to me, again, I think I've said the word maybe 7 times, but it's about the relationship for me, and, and bringing something to the table. What's the solution? Maybe it might not be selling it, it might not be a listing opportunity for me, but how can I help them? What can we do? What can, and to me, I'm going to bring more value with helping them think of a solution that's about them instead of it all about me. Do I want to sell a deal? Absolutely. Is that how I get paid? Absolutely. But that relationship long-term will be more valuable if I can help them with something, whatever that might be. I know there's companies out there that help with, maybe the CMBS market and, anything like that. So it's going to be interesting, and, what happens, and, do the lenders do the pretend and extend, because lenders don't really want the asset. I mean,
no, they don't. We just talked about a short sale that we'll be closing on December 28th. And I'm here to tell you, I was absolutely shocked at the rate, at the ease of that. It was probably the easiest short sale I've ever done in my entire career. And I've done thousands of them. Yeah. But, the bank already knew what it was worth. They had already done the work. And so by the time I came to them with the listing and the buyer, it was like a 30-second yes.
Wow.
Yeah. But there was lien holder 2, 3, 4, 5, and 6, and they said, but you need to get these people on board. And we did, though. We did get that on board. Look, here's another thing too that is, like on this hotel asset that I'm referring to. Not only was there a renovation loan that was taken out during COVID to bring it up to, all the required PIP that was needed, but there were also some of these COVID relief loans that were not forgivable. And these people had no idea that this $500,000 they had to pay back, this $380,000 they had to pay back, this $720,000 they had to pay back. Guys, gals, you need to have like real conversations with those people, because here's the thing. Those didn't show up on title because those were business loans made to the business entity. But guess what? They were for that property. They had to be sold. They had to be settled in order to get true clear title. Because here's the thing. If we went forward and sold that, and then those loans came back, guess what they would have done? Marched right in there and taken the mattresses, taken the beds, taken the nightstands, taken the everything. What does a hotel need? A place to sleep, right? So, so there's so much that goes into, to that process, but it wasn't a difficult process. I absolutely love those processes, Yeah.
Well, congratulations on getting that done. I know that sounds like it wasn't an easy. So what happened with all of those second and third and seventh lien holders?
They all settled, some for zero, because they knew that they were so far down the road. We were able to prove, not only with a full-blown MAI appraisal, showing exactly what value was, but, the financials, right? I mean, a hotel is real estate, but it's a business. So we were able to show exactly how there was no way that she was going to become, the seller was going to
Yeah.
be coming out of it. And the reason for that is because they all just kept piling on. Here you go. Here's more money. Here's more money. I'm sure every person that called her on the phone and said, we have ERC money for you. Okay, I'll take it.
Let's do it.
You know, so it's
Wow.
asking those types of questions. And I've said this before on the show, but I'm going to say it again. You got to ask all the right questions, because not only does somebody have a loan coming due, ask them how many loans they have that aren't showing.
Yeah.
Right?
Mm-hmm.
Get the clear, true, and accurate picture. You may not be a short sale negotiation expert, but there's people in this business like myself who has done these.
Right.
With practically every lender out there and every attorney firm out there. You know, these things, banks will settle. And so, you know, are we in 08, 09? Absolutely not. But we do have people that are upside down. Yeah. And they do need problem solvers right now.
That's exactly it. Mm-hmm.
They need problem solvers right now. And those are the opportunities that we're going after, because there are still buyers for those opportunities if they're priced appropriately.
That's right.
Absolutely.
And that's what we do. Solve problems.
That's it.
What do you do, Heather? What do you do, Heather? I'm a problem solver. I mean, that's just tagline that. Right?
I solve problems.
We make it happen.
I lease office space when no one else can.
my other MO is I get shit done.
I like it. Hey, that's mine. No, I'm teasing. We all, that's why we enjoy each other. We all get shit
right. Done. Definitely.
No, this is tremendous.
The last thing since we had you on the show the last time, you have gone through the CCIM instructor process, and we just want to congratulate you for that. And if there's anything you'd like to share about that process that our listeners, I'm sure they'd love to hear.
Well, thank you so much, Lisa Marie. Yeah. And, you know, you guys taking your CCIM courses, I commend you. Continue on. It's so worth it. I started on my first course, I believe I took in 2000. And I was penned in 2005. And, you know, 18, 19 years ago, being a woman in the industry, you know, it gave me knowledge. It gave me the information. It gave me the understanding. And I'm so passionate about, you know, education, and I love the investment analysis side. So, and getting to the table and talking with owners, it was, you know, I brought value. Oh, she knows what she's talking about. So it was really cool. So when they opened up for the process for instructors about a year and a half ago, and so going through that journey, it's a long road. I ultimately want to teach 104, which, you know, might take me another 2 or 3 years, but so enjoy I think I've had 3 or 4 101 courses, you know, from Raleigh, Durham down to South Carolina. And I'll be in Miami next month. So just really exciting to go around and, you know, see talent and see the hunger and thirst in young people. And, you know, that aha moment from, you know, day one to, you know, by day 4, when they get it, it's like, it's just so incredible. It's so fulfilling to, you know, be part of that journey for them. So I'm really honored and excited, and, you know, we'll keep doing what I do and building my business and, you know, working on deals, but love that opportunity of giving back and seeing others, and especially women. I really love inspiring, and you know, you've got a lady in the class who maybe spent the last 20 years in residential, and she's got some high net worth and clients, and they want to buy this and that. And, you know, to see her, you know, make this transformation of, I get this. And I think everybody starts somewhere. We don't have to be, you know, we don't have to be great to start, but we got to start to be great. Right.
Yes.
So anyway, it's super exciting, but yeah, thank you so much.
Congratulations on that. I've kept in touch with every CCIM instructor I've had, and the relationships that you make through the CCIM organization and how it sets you apart. And Absolutely. of the thousands of people that have been pinned as CCIMs now, there's still not enough women. So if there's any of you ladies out there listening, or, you know, people that fall into minority categories other than women, really think about pursuing the PIN. And there's lots of scholarships out there too. So because it's a time consuming and a pricey journey, but you and I are on the same page, Heather. It's worth it.
It's worth it. I love it. That's awesome. Fantastic. Yeah.
Very cool. Well, I'm so glad you came back
Yes.
on, Heather. We'll have to do this in another year, maybe.
Let's do.
Yeah.
We'll see what happens.
Thanks for being our last guest of the year, and happy holidays, everybody, and happy New Year. We'll see you in January, and make it a great end of the year. We still got time to get some deals done.
Absolutely.
Yes.
Thank you, guys. Appreciate
Thanks,
y'all.
Heather. Good
Bye-bye.
to see you. Bye.
Good to see y'all.
Bye.